Earlier today, we spoke to Muhammed Abdul Khalid, director at Khazanah Research Institute. He said today's figures weren't really a surprise.
That's to be expected, rather. If you look at the export number month on month, there's basically no change. You take year to date, you drop by 6.7%. Bulk of it is because of drop in commodity exports. Palm oil drop, petroleum product also drop. Particularly petroleum product and LNG dropped by about 40% year to date. Why did it drop? You look at our biggest export market. China is the biggest our export market, and China also contracting. If you look even at the growth rate of China for this year is going to be the slowest ever in 25 years.
And shipments to Japan and the EU also coming down. Exactly. So what does this mean then with the Greek crisis still ongoing for Malaysia's exports?
Outlook going to be very, very challenging because it's not only weakness in Euro, but it's also in other countries. Like I said, China, biggest engine after America, also weakening. Nobody is buying, or people are buying less. So outlook is going to be challenging. I would expect next month also the number is not going to be very, very positive.
We did have purchasing manufacturers index numbers out earlier this week, and it also showed less than positive sentiment among manufacturers in the country, coming down new orders. Is that going to continue?
I think it will continue, not only on the purchasing side, not only the business side, even the consumer side. Consumer side also decreasing. If you look at consumer index, actually is the lowest since the crisis. Consumer is not spending, business is going to spend less. If I'm not buying, you're not going to produce for me. So moving forward also, not only external environment is challenging, domestic also challenging, which means the export trade numbers also not going to be as robust as previous years.
Now, other data out this week, labor figures officially from the government, the labor force participation rate at 67.5% for 2014. What's your take on that?
It's a good number because if you slice it, the number of female participation increase. So it's good. There's more female in the workforce, more income. But if you look at wage number also came out last week, almost the same day as labor force number. Wage increased 2013 to 2014 increased by 70 ringgit 1 year. If you are female, in this median number, your wage growth is basically zero. CPI goes up, your wage goes zero. If you go by state, you take the largest state, Selangor, wage growth goes up by 20 ringgit. Hike in oil price would wipe up all your wage, which means your spending in real terms actually declining.
Another statistic to highlight, unemployment dropped by 2.4%, but you saw the highest rate of unemployment in rural areas. Are there policies being done to help balance that out?
There's income transfer that's been done by the government to assist the income growth for the lower income household, yes.
Looking at the weakness in the ringgit, is this something that will hurt wage earners and consumers?
It would affect both sides. On the consumer side, because bulk of our items, some of our items rather, is import, we import, pay in US dollar. For instance, you take dairy products, simple, your milk, we import almost 100%. Ringgit dropped by about 7.8%, you will see the price also increase. If you look at the CPI, dairy products, it has been increasing. It will hurt our pocket. Yeah.
And what was your read on the import figures for May?
Almost also no change. Also certain products went up, capital goods came down, which also telling you import capital goods for your business expansion. When this number is coming down, you know what's going to happen a few months down the road.
So more downside pressure for businesses here.
Yes. I don't want to sound pessimistic, but all the points, data points, not showing a good sign.